we can have it a little bit easy.
Yeah.
All right. So it's safe now. So you've not started. Have you gone through
Yeah.
university?
Yeah. I'm on the process. Yeah.
On the process, where the
Yeah.
week one, day one, or week one,
I'm
day
in
five,
day two. I'm in
day
day
two?
two.
All right, fine,
Yeah.
okay. All right then.
And
So
concerning the question I asked you before, don't forget concerning the freeforest.com.
oh no, I'll get
Yeah.
to that later before we leave.
Okay.
All right.
Thank you.
Okay. So basically there's no need asking everybody where
Let
they
me
are.
welcome my leads. Let me welcome my leads.
Your what?
My
Your lead is
leads.
there.
Yeah, I have two of them here.
Three.
No, I have one person.
No,
The
no,
second
no.
one
It's
is
not your
here.
lead anymore. He's already in. Your lead
He's a
is someone
member.
that's not converted. He's a
My
member.
lead.
He's
Yeah,
not your lead.
it's my lead.
A lead is someone that has not signed off now, you know. But he's
Yeah,
already
there's one guy that I'm trying to. Okay, it's not the one.
no, no, no. This
Like
meeting
him.
is not for non-members. This is only for members. All right.
Yeah.
All right. So
Okay.
basically what we'll do is that we'll start from the scratch, all right? Because the reason why I asked is so that we know from what I understand, if we have someone that has not started, there's no need asking everybody where they are, right? So what will happen is we'll take it from scratch from the beginning.
Yeah, better.
Emmanuel,
Yeah.
may I still, hello everyone, sorry, I cannot show my face. I think you understand why.
Okay. Yes.
Okay.
Right.
I have a question though, when you go through the process.
Okay. Ask a question now.
Okay, so you know that I finished the university,
Yes.
and the last time when I was on the challenge,
Yeah.
started and I called you, remember?
Yes.
And okay, I put the information. Okay, I think I missed the entry price.
Yeah. The
Okay,
entry point. I think it started maybe too early
or too late.
or too late. Yes. Exactly. Yes. And
Okay,
that's not good too.
and
Mm.
then because I was a bit stressed out. I have to say that. Anyway, I managed to make some profit. Actually, I won something like 90 euros.
Okay,
But
that's not bad.
it was
That's a lot of money.
luck. It was out of luck because it
But
was
is
going
it demo
minus
account or real
100.
account?
No, no, demo.
Okay, all right.
Okay, because actually I saw it going down to minus 100 and up, and so I just clicked when I saw 90 euros,
All right, we'll
but
talk about that one too a little bit in the
I
stands.
didn't understand what I was doing actually, and then
All
I
right.
closed it.
Okay.
Okay.
All right then. So basically, what will happen is we'll take it from scratch, and then, of course, if there's any question, of course, we can ask, and we'll continue from there. It's supposed to be a short session, short, snappy, and then yes, we'll take it from there. So let me start. Let me start by asking a question. Do we understand what it means to buy and to sell?
Yes.
Okay, we understand. If you don't understand what it means to buy and to sell, just raise your hand. It's not like buying the market and selling the market. It's not the same thing. So please, if you understand
You,
what buying and selling is, can somebody just explain? Teshima, you can shoot. You can tell us what buying and selling is. So
you buy when the price is low and you sell when the price is high.
yes,
So when the price is low and the price is going to go up, right?
yes,
So you want to buy when the price is low, yes.
yes. That's correct. That's correct.
So I have a question in so that my answer.
Yeah,
So I understand the buying part. Okay, I have money in my account and I want to buy CAD against USD, for example, like the currency pair, and I
yeah.
just go and say buy because I am not already in a position. I understand buy. But for sell, you can only sell something you have. But if we don't have it, how do you sell when the price is now high?
That was why I asked that question. I will show you.
Okay, go ahead.
Because it's not like selling in the market, all right? And buying and selling is not the same. Because in the market, in business balance, like we all know, you understand. If you did business studies or whatever studies, understand whatever you've done, you will just understand what I'm talking about because buying, selling, they're not the same thing. Okay, all right. So when you're buying in the market, let's say for instance now you buy a TV, all right? You buy it at a low price, all right, and you want to sell, you sell the TV at a high price, of course, to make profit. Am I correct? Am I correct?
Yes, you are.
D'accord. All right, good. So, but then in this case now, our buying and selling does not have to do with profit and loss at the point of cost price and selling price. No, that's different. Understand?
Okay.
In this case now, when you're talking about forex, you see, buy here. Okay, the market is closed. So what I'll do, I'll go to crypto. Because crypto never sleeps. They're always on. All right. So you see, they are up and awake. So when you go to cryptocurrency, you have Bitcoin and all the rest. They are still shining. Bitcoin was 20,000 like 3 days ago. Imagine if somebody had invested in Bitcoin, at this point, you understand? And then you see it in disappearing before your eye, and you don't have a stop loss. Teshima, all your money go finish. I don't care how much you have. This money,
So at that 20,000.
Yes, even this one is almost 18. So let me change it to 4 hours, so you see a longer period. Understand? All right. See, so we now squeeze it up, but if you look at it, see where it was. It was just slightly 20K. Understand? And that was just like not long ago. And before you know what's happening, zoom, it has gone down. Imagine if it was at this point, and you predicted a sell, you predicted a downward movement, and you opened a selling position. That means you went here and clicked. You see, what you're selling here, you're not selling a commodity you own already. What you're selling is like you're going bearish. You know what bearish is, right? There's bearish and bullish, all right? Bearish is when it's going to go down, all right? Bullish is you're saying this thing is going to go up, you understand? It's like being an optimist or a pessimist, you understand? An optimist says things are always going to go up. It's always going to go well. It is well, you understand? That's an optimist, all right? A pessimist is like, no matter what's happening, everything is just going to go wrong, you understand? Let's just, for this, in the context of this, let's just accept that, all right? Let's not argue about English terminology, all right? So, but what it means is that, if you see, like, for instance, now you were somewhere around up here, the market was up here, okay? And then you see that, okay, this one, it has reached its highest point. See how we do analysis in the market, all right? Everything that goes up always goes down. And everything that goes down always goes up.
Okay.
And even in an upward movement, there's no straight line upward movement. There's always up, stop, go down a little, up, higher again. There's higher highs and higher lows when you're talking about upward movement, all right? And when you're talking about downward movement, there are lower lows and higher lows. Do we understand that? All right, okay, fine. Let me just take it. Let me explain it, all right? So all these candles, you see all these candles, right? You see the lower lines here, right? All these lower parts. These lower parts.
Yes.
What do we call them? These lower parts. What do we call them? These lower parts. Who knows?
They are
Who knows
lows.
what they are called?
Wicks.
Yeah, they are wicks. They are wicks. But the lower parts, we have the lower parts and we have the higher parts here. What's this lower part called and this higher part? What are they called?
Support and resistance.
Exactly.
Support and resistance.
All right. So it's support. It takes support as on the floor, right? On the floor, the floor supports the house, all right? And then the roof resists you being thrown off by gravity if Earth was zero gravity, you understand? All right. So just think about it that way, right? Support is when you see the thing going low, and then it's going to go up. All right. So here we have let's say supports, and then here we have resistance. All right. So when you talk about higher highs and higher lows, you understand? So when the thing is up here, you understand? You're talking about this place is high, right? You see where I'm pointing? Here is high, here is also high when you compare it to this place. But these ones here are not the same height as these ones here. You understand? So when you're talking about support and resistance, you have higher highs and higher lows. All right, there are higher highs up here is because they are going up, and then these ones are also high, but they are lower than this one up here. Am I correct? Do you understand what I'm saying, right? So we're talking about supports and resistance, the lower part and the higher part. You understand? When you're talking about a downward movement, you have lower lows and higher lows.
Highs. Lower highs.
Lows are always a downward movement. Highs are always upward movement. So lower highs and higher highs is for an upward movement. So if I were to draw a line now, you understand? If maybe this one was trading view, all right? I would have set my marker and drawn something like this up here straight, all right? And put down there and drawn up here like this. But in this case of going down, I will draw like this. You see, this place now is a low, right? But it's higher than this one. Am I correct?
Yes.
So this one is higher low. This
Lower
one
high.
is lower low.
Lower high, Ismail.
Lower high is when it's going up.
No, it's lower
Higher.
high.
This is higher low and lower low.
It's lower high and lower low for going
Yes.
down. Uncle E.
That's what I'm saying now.
No, you are saying it the opposite.
What did I say?
Higher
You say
lows.
higher lows for when it's for a downtrend.
All right,
Downtrend
let's zero our mind. All right. Okay. Here, this one now, is a lower low, right? Do we agree?
Yes.
Yeah.
Okay, good. And then this one here that is also here. Well, what did you guys call it?
Lower high.
Lower high.
Yes.
Yes.
Not higher low, right?
No.
Yes.
Are you very sure, right?
We are very sure.
Okay,
Higher.
very good. We'll check it out. So for the sake of understanding support and resistance and the movement of these weeks, understand? All right. You draw a line, understand? And it's okay. When you see it's up here, the next movement, now this is the highest point this Bitcoin has ever been, all right? There's no other way it will go. It's going to go down. But before you place your trade, you make sure you see an indication that it's going to go down. Who can tell me the indication we're seeing here now that indicated that it's going to go down?
M.
Exactly. There's an M here that is showing it's going to go down. And you don't just say, okay, I've seen this first M and it's going to form another M. You've not seen this one going down and you just jump on. It can decide to go back up again. You understand? Wait until you've seen at least one or two candles showing that it's actually going down. Then you can now make your entry point at this place or this place. You understand? It's better you don't take a little bit profit for you to make a bigger one than you just jump into early. All right. So when you're at this point, you make a sell. That means you go here, you go to the Bitcoin and you click on a sell. So when you're clicking on a sell, you're saying that this item is going to go down. I think it's going to go down. All right. And when you click on it and you're right, and it actually goes down, you see your minuses going to towards plus, because every position you open, you start always with a minus.
Just a minute, please.
Yes.
You know, when you see the M,
yes,
you need more than one indicator to determine. You know, but in this case, is that what they call the engulfing?
Engulfing candle.
Is that what is looking like it in that place?
You mean here?
Yes.
Now that the green and the red.
The green and the red, yes.
The green only shows. Let's say, for instance, now when we're on the 4 hours mark, all right? So that means that every of this candle took 4 hours to totally form, all right? Each of this candle formed it took 4 hours to totally form, all right? So it means that when this candle started, all right, it might have started somewhere down here, and it continued an upward trend and finished in an upward trend, did not go down. But when you have a week, for instance, now, this week, you know, this is a week, right? So maybe the thing started here, or it started down here, all right, pushed up a little bit, all right, got up here, and then started pushing down again. But the thing terminated here and started this other candle when this one was here. That's why generally you see this one showing this place because it's in a downward movement, all right? But this green one is only showing that the candle started here, went a little bit lower here, had a little bit weak. Let me make it bigger so we see what I'm talking about. All right, it started a little bit here, all right, but then we went up, stopped, went down a little bit, then started going up, went all the way up here, stopped here, came down a little bit before jumping over to this one. That means 4 hours elapsed here, and once 4 hours elapses, it will go over to the next candle. Then now went over to this candle and started. So these greens mean that it was an overall upward movement on that candle, all right? And then this other candle was an overall downward movement. But probably the candle, this one stopped somewhere up here, all right? When it stopped up here, this one started here. But instead of going upward, it started by going down, 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 went all the way down here. But before it finished and terminated, it came up a little bit, but stopped here. And because it stopped here, the next candle began this way here. But when this one began here, it went up here a little bit, came down, stopped, went down again, down, down, stopped here, came up a little bit, and then terminated somewhere around here. Sorry, this was very terminated because it was a downward movement. So the green candles basically mean an upward movement, and then the red candles basically mean a downward movement.
I have a question, please.
Bullish candle and bearish candle, yes?
You just said something about we are on a 4-hour time frame.
Yes.
And you said the candles take 4 hours to form. So
Yes.
are you by this saying that if, for example, we can go lower, say the time frame changes, could you please try to, I want to see where the options. I know we have.
All right, see, we have 1 minute. We won't have a tick serve. A tick is just instantaneously. But we'll have 1 minute, we'll have 2 minutes, we'll have 5 minutes, we'll have 15 minutes. For scalpers, 15 minutes is most ideal, all right? That's me. All right. And then there's 30 minutes, there's 1 hour, there's 4 hours. So, but the main most in the indicators, understand, use 5 minutes, 15 minutes, 4 hours. All right. Of course, sometimes you can see 30 minutes and 1 hour, but these are the most common ones. All right. And then when I change now, you see that these lines will have a different form. So what it means is that if in 4 hours now, that's a longer period of time, we see this format, all right? But if I change to, let's say, 15 minutes, for instance, now, you see a different format. It's not the same because this one was is shorter in time, and the candles only lasted for 15 minutes before they jumped to the next one. Imagine 15 minutes candle lasting 15 minutes, and then maybe that candle only went up in that 15 minutes, all right? And then the next one, it went down. But generally, when you combine let's say, for instance, this single candle, this very long candle here now that you're seeing, all right? It took 15 minutes to go from here to this place. But in the 4 hours candle, this candle is still on. You understand?
Yes.
It's still very much on, and it might end up being a red candle at the end of the day, or a bearish candle. A bearish candle is red, a bullish candle is green. Okay?
Yeah.
All right. So if it's difficult, just if you don't understand what I'm saying, just stop me and I will explain. Because I want us to understand this so we can be able to place our trades.
Can I ask a question?
Yeah?
Yeah, the candle you just indicated now, the
Yes,
very
this
long
one.
one. In the 15 minutes timeline, it seems it came down again. Because where the next candle is starting from, is it an indicator that it came down again?
Yes. So what happened there? This very candle that we're seeing here, started up somewhere. It started here, all right? Okay. Started here at this point, all right? But went down a little bit. So when it went down a little bit, this part would have been red if you had seen it forming immediately. But after it went, that's why you see a little wick underneath. You're seeing the wick on the right?
Yeah.
Yeah. And after it went down a little bit, it now went up to the original starting point. Now, from the starting point upwards is green. From the starting point downward is red. You understand what I'm saying, right?
Okay.
But if it first went down to a red, that is, it went down a little bit, came back to the starting point and continued going up, that's when you see a wick underneath.
Okay.
So this
Okay, yes.
went up, shot up, got to even this higher point, but also went down a little bit, canceling that upward movement and left a wick there. When he left a wick there, he jumped, the market jumped down immediately. So you're right. So the market jumped down from here. Of course, it's a green candle, but the market jumped down. When it jumped down, it came down to this point immediately. Started from this point here, this lower marker. And when it started from this lower marker, it went down further a little bit before recovering and going up back to the origin, and then going back again to the highest top, then returning towards the origo, and then jumped over to the next candle, and it started forming a bearish candle.
Okay.
Understand? So do we understand the concept now?
Yes, I do.
Because this is very
Yes, we
important
do.
for us
I
to
do.
understand, how the market moves, what happens, and how it goes. All right. So now, we're not at the level of doing our analysis and placing our own trades yet. That's not where we are. So although some of us are a little bit further ahead than others. So what we want to do now is that you've gotten a signal, all right, and you want to open a trade, all right, and that I call it a trade because I'm not saying you want to buy something. No, I don't call it a buy or a sell. A buy means something else, a sell means something else, and it does not mean the same thing as buying a commodity and selling the commodity at a different price to make profits.
Okay.
That's not what it's about. It's a different thing altogether.
Okay.
All right? Yes. So when I go to sell now and open a selling position, there was nothing I had open before. All right. There was nothing I'm opening. There was no market I was doing. I want to enter the market in a sell. Teshoma, I have a question.
I
Yes,
have a
that's it, yes.
question.
All right, shoot. Let's take the question.
Please, I'm very sorry. I don't know how lame my question will be right now. But
Okay.
the truth of it all is that I still do not want to die in silence because the people I'm actually in the meeting with are all over everywhere and they know what is happening. And I might just say, make I just follow the go. But
All
the
right.
truth is, I'm not following.
All
This
right.
is just like Epic 101. And for my own level right now, the question I would love to ask is first and foremost, the coloration, what does it signify? At least by the time I understand the lemon, the red candles, what it signifies, then as it's moving, I will know what it indicates. And then the line in between, the line that goes up and down, what does it signify? And the one that you're going up with the numbers now that has a whole lot of things here, the Bitcoin, the things to sell. I really need to understand all these things before we begin to shoot.
All
Thank
right.
you.
All right. I don't know if, because that was how we started. We started by explaining what the candles are. First and foremost, you've not gone through the university. If you had, you would have understood a little bit. So what these candles signify, the green candles are called bullish candles. Bullish candles are candles that indicate an upward movement, all right? An overall upward movement, all right? Then the red candles are bearish candles. They are candles
Upward
that
price movement.
Yes, exactly.
Price.
Movement. But you understand that all this, the movement you're seeing here is the change in price, right? Francisca,
Okay.
you understand, right?
Yes.
This one, see my cursor. This thing that you're seeing that is moving up a little bit down. Let me go to 1 minute so you understand. You see the movement a little bit more. Okay, see the crazy movement now. See the jump. Okay, are you seeing it there? You're seeing this one,
Yeah.
right? That is moving. Okay, now this is the change in price of Bitcoin to the dollar because we're in Bitcoin. All right, you see it is going. So if I want to, as it is now, it's not really safe to say, okay, because it's going up, you jump in and you see it will start going up. You can stop there immediately and start going down. That's where people lose money. All right, but we're not talking about that now. So you see this candle now is forming a red candle. That was what I was explaining before. So now it started from this point. All right, when it went down, when it was going down, it was red. any point from the origin where it started underneath, if it goes down it, you see a red candle, and red candle is just a bearish candle, right? Bearish means that it's going down. Okay, that means the market, the price is going down. And anywhere from the origin of that, where it started from, upward is a green candle, and a green candle is a bullish candle showing an upward movement in price. We're talking about prices now, and you just keep your eye on this place now, how it's moving. But when it's moving, you see, when it reaches, it's almost at the point of origin where it started. It goes down a little bit, you see a red. It goes up a little bit, you see a green. That's exactly how these candles were formed. All right. So this one shows you that this thing has already gone up from this point to this point within 1 minute, because this we're in the 1 minute time indicator now. You understand?
Okay.
So now it goes up now, and then it comes here, does a little bit resistance, resistance and support, or a little bit of consolidation, a little, because what I mean by consolidation is that something is going up one step, goes down one step, goes up one step. It's not going anywhere. It's just doing like this, like oscillation, like upward downward movement between a given line, you understand, or two lines, and then imagine a ball bouncing in between these lines, up and down, you understand? So generally we say that market makes three movements, all right? Upward movement, downward movement, and sideways movement. Do you understand that? Upward movement is when the price is changing to a higher level. That's an upward movement. Downward movement is when the price is decreasing. And then sideways movement is when the price is neither increasing nor decreasing, generally.
In between.
You say?
In between.
What?
I said in between.
Not exactly in between. It just moving.
No, constant, same price.
Constant, yes. Constant.
Okay.
The constant is not like it's just there like that. It's never like this. But although
okay, not going higher than down, not going higher than up.
Yes.
Sort of oscillating.
Exactly. That's the exact word I used to, oscillating.
Oscillating is big English.
Let's say for instance now.
It's moving sideways,
right? Sideways. Okay, just draw two lines like this, all right? It's bouncing in between these two lines. It hits the top, comes down, hits the down, goes up, hits the top, but just moving
doesn't
sideways
exceed
like that.
it. Yes,
It's not really going up
there,
or down.
locked in. Okay.
Sort of, you understand? So that's just what all this is about. This is simple, actually. It's not difficult, but that's the basic principle, okay? So now, when they tell you a buy is when you're supporting the upward movement, all right? A sell is when you're supporting the downward movement, all right? The sideways movement, we don't enter the market then. When it's doing this oscillation or consolidation, don't enter the market, because nobody knows what's going to happen. Because until it breaks away from that oscillation position, breaks up, hits that point again before it starts going up, then you know it's going to go up. It can break out, you understand? That's breaking off the roof. That's where you have support and resistance. If it breaks off the roof and it keeps going up, then you call that one a support. But when it breaks down from the floor and starts going down, then it was a resistance. Okay?
Okay.
Do we understand it now?
Yes.
Okay. All right. So we move on.
It's becoming very crystal clear.
Very good. I'm happy. So now, when you hear a sell, or you want to do a sell, the sell, like I said, is not as if you have something already somewhere that you bought that you're going to sell. No, the sell is that you're supporting the bearish movement or the downward movement. So you now go click on Bitcoin, and I want to sell. Okay. Now, ordinarily, most of them, you have to choose your lot size. You have to choose the quantity of the Bitcoin you want to buy. All right. This one is saying that I can buy 0.5. If you want to change it, you can change it to no matter how much you want, or you can also increase it to the given price that you want. Understand? All right.
Emmanuel.
Yep. Yes.
Sorry. Last time I was a bit confused because I had a currency. I didn't have the amount, but I had the currency. And obviously, I didn't see where I could change that into, number of pips or things like that.
No. Yeah, this one we're not choosing pips yet. What I'm choosing now is, let's say for instance now, I want to buy. Okay, let me choose another cryptocurrency that is a bit cheaper, so we can get more. Let's choose Neo. I traded Neo last week, and it was very. This was it this week. This week now, Neo gave me lots of money, but now it has fallen down from where it was. See where it was before. Went down. It was 20 something when I traded it. All right. So let's say Neo now. I want to buy or sell Neo. Okay. Let me do a buy. All right. On Neo. All right. So Neo is saying I can buy 30 Neo. All right. And watch what happens to the required margin here. See the required margin here. Very important for you to check your required margin and compare it with your capital, so you don't over leverage. When you over leverage, anything happens, you lose all your money. But when you leverage with your sense, you can lose small money to come back the next day to fight and get back your money. You understand? That's how the market is. So try not to over leverage. So that's why you have to watch this, check the required margin, and check the amount you have in your account, that your account can carry it actually. If not, don't. So I look at it, I have, this one is saying 2,191 crowns, and I have over 2 million. So wow.
Sorry, sorry, please.
Yeah.
That margin is supposed to be the difference. Is the money you have compared with the price you're going to trade?
The required margin is the amount of money you need to have in your account to be able to hold this position and keep it open. Let's say if I reduce for
how long?
For as long as it takes, so that if, let's say for instance now, if you see the required margin, right, 2,191, if my margin starts becoming let's say times 2 of this, that means the margin now, I'm on 0.5 margin, understand? That's I'm using half of my total money, understand? I'll receive a warning to put money. Otherwise, if it hits that my amount now that I have is equal to or less than this amount, and it goes down a little bit more, they will close the position at a loss for me. Because if you see 30 of this Neo, 30 Neo, the price itself is supposed to be 4,382. That's the actual value. You see the value there? This is the actual value. But my broker has come in and said, okay, we will give you this thing that is supposed to be this amount at half of it. So that means this is 1 to 2. Because when you're trading on cryptocurrency, they don't give you very high leverage. We know what leverage is, right? Like if you have, if they give you 1 to 10, that means if you have 1,000 naira or $1,000, you can open position of $10,000. That means 1,000 of your cash can open position times 10 its value. So they give you only twice the value when it's cryptocurrency, because anything can happen. Cryptocurrency can be volatile. You can make lots of money, but you can also lose money. You understand? So that's the way it is. But if I had gone to oil or another thing, maybe the market was open, you would have seen the difference in leverage now. You understand? So that's exactly how it is. So this required margin is the margin required that your money must not be under, in order to keep this position open in case of negatives. You understand? But in case of positive, you don't have to worry. So that's why you can, if you open a position with all your money and you enter the market immediately, or almost all your money, and you enter the market immediately and everything starts going your way, you don't have to bother. But if things start going the opposite way from what you chose, you understand, then you're in trouble. So that's why it's good to think about your leverage. I always say, don't take more than 10%, 20%, max 40%. In fact, 40%, don't even do that. You understand? Let's say if my total equity was like, let's say, 5,000 krona, you understand? Then this would have been a very tight margin for me to take to open up 30 positions, all right? I would have just opened up maybe 15 or 10. So I can still trade, make a little money without running too much risk. This is what is called risk management. Proper risk management. You manage risk so that you're able to give yourself the buffer to take any kind of eventuality, you understand? In case the thing goes down first before it starts going up in your direction. So you're able to hold the position until it swings in your favor. Do we understand that?
Yeah,
Can I ask a question,
Mr.
please?
Emmanuel.
Yeah, sure, shoot.
Who's going first?
Yeah, you can go ahead.
From what I understand, say for
Yes.
example, the price of is it NEO? We're talking about NEO.
Yeah, NEO, yes.
Was 17.21 and want to buy at that price, right?
You have to buy at that price, yes.
Yes, and on this contract you want to buy 30. So I take it that if we are doing 30 minus 17 is what gives us this 516, which is equal to $516, which is equals to the 4,300 that I see there.
Yes.
Yes, but you are in essence saying that the 258 leverage is like half of 516.
Yes.
So is it that you are required
of one to two here? They're giving me 1 to 2.
Yes.
Yes.
So for every $1 you put in, they will guarantee you $2 more. That's something like it.
Yeah, something like that. Yeah, something like that. So it means that for every dollar cost of that item, you understand?
Yes.
They allow me to open twice of the value. Yes. So if
they are lending you money to trade.
Exactly. Yes, sir. Correct. And then that lending you money to trade is not all good, is not all bad. Because the more they lend you to trade, the faster you are able to lose money. And the faster you're able to win money too.
Okay.
Yes.
And you lose money at your own risk. If you lose their money, they will get it from you.
No, they will never allow you to lose their money.
Yeah, but if you make a loss,
to lose their money. What's your
if you make a loss,
yes, that is your own.
Okay, they will not let you go past where your own money is.
No, that's why this margin is there. They will never allow you to go past your own to encroach into their own. They will just shut it down. They will tell you, look, add money now, your own money is finishing. If you don't add money now, this position will shut it down.
So that's why when the thing is going down, your money can be exhausted.
Exactly.
So you cannot wait for it to come back up because your money gets exhausted at one point and then there's nothing for it to build up to climb.
Exactly. And that's why you have to manage your risk properly. So you don't find yourself in that situation where the thing exhausts all your money. You understand?
So does the trader have any say in the required margin, or is dictated by the broker now?
Well, sometimes it's negotiation. You can negotiate with them. Sometimes it's a standard based on your account size. You understand? Because if, let's say, you have an account of, let's say, $10,000, of course, they give you more leverage. If you have an account of $50,000, you're entitled to more leverage, because that more leverage means that they say that they want your trading to be more exciting. You can make more money. That's why the rich gets richer. But in that excitement, there is this coverage of that you can lose all your money even, you understand? You know, because you're trading on high leverage, all right? If you open a position and something goes wrong, something goes against you, it will start eating into your own capital first before it start eating into their own. They never ever lose anything in any trade. And you know, the reason why they do that is that they give you more money. So when you open more position, they will collect more spread. And guess what? The spread they're collecting is coming from your own money, not from their money. Let me show you what I mean. Do we know what spread is? Do we know what spread is?
Please explain.
Okay, a spread is the difference between the selling price, which is this price here, and the buying price, which is this one here. And if you see for cryptocurrencies, the spread is quite high.
Yes.
Very high spread. Because you're seeing that, okay, this is 16.77, this is 17.19. Let me press calculator and tell you what it is exactly. And then by the time you open 30, they multiply that amount that we got there by 30 for you to have the actual amount that they will collect. So let's say 16.78 and 17.20.
0.42.
Yeah, and also you get a sharper calculator. Yes, you see, and then multiply. What do you call it?
0.42 spread.
0.42 multiplied by
Yes.
30.
Times 30. $12.6.
Okay, that $12.6 that you're seeing now, all right, multiplied by 2.
Why by 2?
Because it's 1 to 2, you understand? You know, and that's how they calculate their spread.
Okay, so you pay them this amount, 25.2.
Once you open, okay, let me illustrate. Let me open this position. You see, 110 already gone, and this 110 is not because the price changed. This is the spread that they've collected now. That's why every position you open always starts with a minus.
That's negative. Oh my God.
That's negative for the market to go up, so that the negative that they've collected will come back to you.
You feel
But
it,
just
then
come
you
back
start
to you,
making
you paid
profit.
that,
Yes.
and you've lost it.
Okay.
So your broker is not always your friend.
That's why they keep calling
That's
you.
why that's what I want to ask Mr. Emmanuel.
Yes.
To actually know, when are we advisable to enter the market? Is it when it is a plus or negative? Is it when it is positive or negative? Yeah.
Both. You can enter both. You can enter when it's positive and when it's negative. When it's going down, when it's going to go down, you make a sell, you enjoy the negative. When it's going to go up,
then what is the indicator of the candles? How do you watch the candles? If it's going to bearish or it's going to bullish?
Yes. All right. So okay, Teshoma, you've seen that I've opened the position, right?
Yeah.
If I want to set my stop loss, I can go to edit. I'll answer you first, Queen. Tina, let me just do this one. When I click on edit, I come and see, you see close at profit, right?
Mm-hmm.
And you see close at loss.
Yes.
So I click on this one and I set where I want it to be. Let's assume I want it to go to
$18.
No, let's say, because I'm doing a buy, right? If I increase it, keeps going up, but it's going up so slow. Why? All right, let's see. See where it is. It's not even going slow. All right, so let me bring it down. That's too far. It will never get there before the market closes.
Yes.
All right. So it's saying, let's say I want to take profit when it's like okay, $300 or almost $400. All right, or 400 krona. Sorry. Then I set my stop loss where I want my stop loss to be 250 something. All right, it's supposed to be showing the lines here. I don't know why it's not showing. Let me change to 15 minutes. All right, yeah, those are the lines. They're supposed to appear. All right, so I set my stop loss. It's going down. You're seeing the line going down, right? And the line coming up again. You see it?
Yes, that's true.
Good. So you're seeing where it is. And for me, if I'm to set my stop loss, I'm going to set it somewhere around here to be on the safe side. For take profit 1, all right? Take profit 2, I can set it to be somewhere around here.
No, that's stop loss you're doing.
Stop loss, sorry. That's what I'm saying. Stop loss, sorry.
Yes.
I meant stop loss. So stop loss can be here. If I want to be very optimistic, I'll set it a little bit lower, than somewhere around here, because I'm sure it's going to go up no matter what happens, all right? But before you can be sure, you have to be sure. Somebody is coming in. Okay. Esther Omega is coming in. I wonder what she wants.
It means her husband.
Don't mind that. So let's see. If you take it down there and leave it there, then to set your take profit, all right? You just set it up there. Okay, somewhere. No, that's too high.
So in essence, Uncle E, in essence, the close at profit for this buy that you're setting at 722 you want to set it at $18, for example, you are confident that it will get to $18.
Yes.
You are not sure what it will do after $18. So
That's
you
why
said
you
when it gets to $18, give me my profit first.
Exactly.
Then you continue from there later.
Exactly.
Then for the stop loss, in case it did not now climb, it now falls down to less than that buying price.
Exactly.
If ever it crosses like 16, let's say we are putting it on $16.90. Once you get there, please terminate my trade just to make sure that my loss is contained.
So you got your equity. You understand?
Yes. Okay. Yes.
And then it kind of prevent catastrophic loss. You understand? That's why you have stop loss and take profit. Take profit is that, you know, sometimes you see that you have a week. You understand? Let me see. You see this week here, this one here. You know what happened there? The market shut up. Only just 1 second. Hit that point. Let me don't know the volume. Hit that point, and it started going down again. That if you wanted to close it manually, you wouldn't have been able to take that profit there.
That time, yes.
Exactly. But if you had set your take profit there, it hits that point, the thing closes
you collect your money.
You collect your money before it starts going back down again.
Perfect. I understand it.
Yes.
That is, it's more important to set up the losing clause and stop loss and the take profit.
Always.
Yeah.
Always. Let nobody tell you otherwise.
But I heard you telling her that, I heard you telling the last speaker, I can't remember her name. She said she opened a position because she didn't set a stop loss and profit. You said sometimes, maybe when you are in a hurry, you can quickly take the position, like execute the market. Then later you can edit it and go and set.
Yes.
Okay.
Yes, because let's say, for instance, now, you see, the market movements happen like this, you understand? And a split second, there was a day I opened the position, within a split second, 500 krona, straight, immediately, plus, you understand? And I had not even set everything, you know? Just 500 immediately. And imagine if I had set the thing before I entered, the thing would have, and I set it at 500, it would have closed at 500, I wouldn't have gotten more profit. But it would have also been a safeguard for me. So it's just two ways, you understand, you know? But the thing, you see the market is going to move and you see the movement, you're convinced about it, open it, enter immediately, edit, and let it run.
Okay.
But market execution is different. Market execution is when you get an order, and then they say at a given point, let's say 17.44. After that point, the market will start going down, and it was going up. All right. So let's say I'm using this one now as an example. We all see this one, right? So now it's at 16.77, and they said at 17.20, the market will start going down. It will do all the upward movement it will do. Let's say, for instance, now this one here now, at 17.28, somehow, something around there, it started going down. So while it was still here, they tell you to place a market execution, because right now it's going up, but when it goes up to 17.25, it start going down. So you open an execution, set your take profit, your stop loss, and then you set your execution at the point you want it to be. I'll show you
how to make it sell.
I will show you how it's done too. First, let's close this position before my money finishes. All right. So to close position, you click on close, and then you close position. All right. So now to place a market execution, maybe it's a sell that you want to place, because we say that when it gets to this point, yeah. All right. Let me continue, because it said that when it gets to this point. All right, when it gets to this point, it will start falling. So to place a market execution, we just click on this cell, and then here in this case, in this my program, you go to advanced. All right, it says sell when rate is. You understand?
Okay.
When I click on it, so you see it there. So what do? I just increase it to that 17.25, right?
Yeah.
I can just clean it and put 5 there. You can type it, or you click plus and minus. All right. So now it's there now, exactly there. So now I've set that one, but I can also set my close at profit and stop loss in the entire execution. Finish the whole thing before I place the order. You understand? So after placing the order now, I've set it there. Then what do? I just go ahead and click on execute.
Where is execute?
Never mind the file. The guy won't disgrace me.
You know, at times the markets move with a high speed.
Sell here. You see it here?
Sell, yes.
I'll execute. So it's done. So the thing is been placed. So anytime that thing gets to that point, it will open. You see, nothing is counting, but there's something here to cancel and something to edit.
Okay.
So the order is still there. All right. And if I click on edit, you see the order exactly the way I placed it is there.
Yes.
All right.
Yeah.
Yeah. So when it reaches there, it opens and then it is
Emmanuel,
for you.
Emmanuel,
Yep.
guys, I need to leave. I'm sorry. I'll see you tomorrow.
All right.
But sorry, I just checked my my broker's platform.
Yes.
I forgot to close my position.
Oh my God.
If I wasn't on a demo, I would have earned 6,900 euros or USD. It's a pity. It's a pity. I'm not on my real money.
Yeah. Congrats in advance.
No, baby, I forgot.
All right.
See you tomorrow.
Yeah.
All
Bye
right,
bye, Hortense.
Bye, Hortense.
So
is it
Let's cancel.
you have a question?
is it possible to like I noticed like you can't do everything, Uncle E.
Yes.
So is it possible to like if I'm seeing some people who are on fire in this example, and I'm thinking like some people are on the same level with you. Sometimes it's good to be able to ask them like you guys can connect separately to be able to move on. So instead of waiting for you all the time, I think that would be a good idea. So if you can encourage that a little bit in the group.
Encourage what? People that do what?
Like I noticed now that like this lady that just left, she
Yes.
started training on demo.
Yes.
And it looks like I will be on the same, like she's me and I, we are slightly on the same level, for example.
Yes.
I could easily chat her up and we could do things together. So if I'm just saying like, is it possible to like encourage such like so that people will be able to learn from one another when because you may not always be available.
Yes.
Yes.
The group, the reason why we set up the group is that even in the group, you can come in the group, place a chat, and communicate with anyone that is there. You say, this is what's happening, this is where I am. Anybody can anybody give me and can the bar muta the eka?
Okay.
You understand? So the thing is you place a chat there in the open and tell them, see what's happening. I need help with this or I need help with that. Anybody can just answer. That's why we have the group is open for such discussions and all that. It's encouraged.
Okay, that's fine. Yeah.
So can we proceed? Any other question? Do we all understand? Are we on the same page now? Because it's important that we're on the same page.
Yes, I think I'm following.
I think so. At least we are getting familiar with.
Yes, that's the word. Yeah.
Some of the things I had in the university is making sense.
Yes.
So it wasn't making sense before. So
trust me.
It's good for you to actually hear it.
Yes.
Someone you can ask a question, so you get it better. Yes.
Yeah. So kudos to you for that. Thank you.
Thank God. So now,
Uncle E, when I open my demo, for example, I only see the currency pairs. How do I get to like cryptocurrencies?
Okay, good. You come to your menu. There are two menus here. Understand? The program menu where you have all these ones here. All right, and then you have the menu for everything that is there. Like for instance, now I have my favorite. Right, my favorite is when I open anything and I'm trading it. Like for instance, now let's say Ripple XRP. Ripple is making ripples these days. Everybody's talking about ripples, all right? And this ripples is going somewhere. So I now see that Ripple. I want to have Ripple as my favorite. I click on it, and then it joins that list. All right, that one is different. Then if I want to go to all indices, I come here, Yeah, I have Germany, Swiss, USA, ASX, USA 30 Dow Jones, Euro 50, US Tech 100 or
But
Nasdaq.
these are not the currency pairs that we know.
No. This is not currency pair. This is indices.
Okay, this one is another one.
No, these are indices. Indices, they are different. They are different stuff. All right. So when I want to when I come to currencies, here I see forex. You see forex. They are
Yes.
the three. We have major, minor, and exotic. We all know that, right?
Yes.
For those of us that
Yes.
have gone to university.
Yes.
Major will have major mainly made with a euro
USD.
USD, all right?
Yes,
So we have all of them here, all right? They're here. So these are the currency pairs, right? They look familiar now, right?
Yeah,
Yes.
yeah.
Yes. So all of them are there. So you scroll down, choose whatever. For me, again, I choose the ones that I trade mostly. And you see all the ones that are marked. Those are the ones I
Yes.
trade mostly. All right. So you come to minor. All right. Minor is Canadian, Australian dollar, CHF, that is Swiss francs, and all that. You know, Naira is not here, of course. They have JPY and all those things. You know, all those things they are all here. The market is closed, like we all know. All right. So then you have exotic. Exotic are all those other ones. SGD,
Developing countries.
DKK, that is Danish krona. Then you have Norwegian krona against the Swiss franc. You have the Swiss franc against my Swedish krona. Understand? And then you have euro against the Czech Republic currency. And then here you have euro against Danish krona, which is making some wicked, stupid movements. I don't understand even. Right? What kind of a thing is this? I mean,
The weeks are so long.
so long, very long. This is almost like only dojis. You understand that? All right. Well, we know what dojis are, right?
Yes.
Yes. If you don't know, go to the university. Very important. This is not substitute
We
for
have to
university.
refresh.
Go to the university. Oh, it is good. Oh, make we just understand all these ones. But I know my uncle there. He has gone through the university, so he understands what we're talking about. T has also gone to university. For those of us that are still doing it, it's important that we go through the university so we can understand all these terminologies, right?
All right.
Mhm. So, and then here you have oil, you have gold. You understand? This is gold, and see what gold did today. You know, today they called out this signal today. All right, they say sell gold, and I opened gold. Gold was already down here. You understand? Making this movement, and I said, "Are you sure you can still do it?" No problem. Go ahead. I burned them. I didn't listen to them because I know that when gold has done this, the next thing that it's going to do is either
Go up.
consolidation or an upward movement, or just slightly a little bit lower. And that was what happened. It went down a little bit more and then started going up again. Understand? So imagine you entered here, your entry point was here, and you caught all these pips down here. You've made thousands of dollars.
Definition.
You understand? But if you made a buy here at this point, saying it was going to go up, and it goes ahead and does this, and you don't have a stop loss, your money don't finish. You know? So that's the thing. All right. So any other question? Can we take signals now?
Yes, please, let's take signals.
T, I didn't hear you.
I said let's take signals.
All right. Okay, good. So let's say, for instance, now we're saying we'll go back to crypto again, because that's the only thing. Now let me go to my favorite, because I have some cryptos there. Let's say NEO. Okay, we have a NEO, and I do my analysis with this. Now let me be a little bit serious. All right. All these are indicators of a sell, all right? And then, but it's still doing its little upward movement. So I'll wait a little to let it finish, but it's going to go down because I'm seeing head and shoulders and the M shapes and everything. But to get clarity, I can go to 4 hours and check. Okay. Basically, it's still doing a kind of a consolidation here. So this is not a good point to enter, actually, because it's going up some steps, going down the same number of steps and everything. So let's leave it. So let's say, for instance, now we say, but for the sake of this thing we're doing now, let's say we were going to open a position of a buy. All right. Let's say we're going to buy a position, and I tell you to set your stop loss at 15.40. All right, and your take profit one at 17.85. So what you do, you're opening a buy. So before you open your buy, you set your take profit. Take profit we said was
17.5. Oh, that's what you said. I can't remember.
17.58. All right.
Yeah.
Let's say 58. All right, and take profit. Let's just take it down.
Close that.
Yeah.
Stop loss.
Yeah, stop loss. That's close at loss. Understand?
Minus, yes.
Yes. So you take it down a little bit, a notch. And if I'm going to go, I'm more careful. I don't put it down somewhere here. All right. So now I have it that if it goes down this way, but there's a rule of thumb, right? That says that the ratio of your take profit and your stop loss should be 1:1. You know
What
what
does
that
that
means?
mean?
Please repeat that, please.
The ratio of your take profit and your stop loss should be 1:1. So what it means is that if I'm setting a stop loss at 407, I should be able to set my take profit at also 507. Otherwise, it's not worth it. You understand?
Okay.
Somewhere around there. Okay. Well, let's just leave it somewhere there. So it's okay. Generally, basically 1:1. Okay.
Okay, based on the amount, that's what you mean.
Yes, based on the amount of profit,
yes,
and
yes.
loss that you're going to incur at those points. If you cannot make that analysis and back it up and say, okay, this is good, this is what I want to do, don't enter that market. If your stop loss is times 10, your profit, why would you be risking? Why would you be willing to risk 10 times to get only one time? It doesn't make any sense.
Yeah.
Right?
The manual said you can risk 1 to make like 2.
Exactly, yes. I'm saying worst case scenario.
Yes, 1:1. Yes, I think I understand what you mean.
Worst case scenario 1:1. Because what you're risking should be less than what you're gaining, of course.
Yes.
Yes. So that's the way it is. So I now place my buy, all right? And then the market is going the way it's going, doing its own thing. And then I feel, okay, I don't want to wait for these parameters that are set to step in, because I want to do scalping, all right? I have made a little bit of profit, or this loss that I'm seeing, I don't want to see it anymore. I don't trust this market anymore. This thing is a reversal, all right? I'm seeing a rejection in what I set out. Okay, what do? I come to close, and then I come back here and confirm the close, all right? When I confirm the close, everything closes. This is
so how do you know what you made or what you lost?
It will be showing up here. You didn't see it? You didn't see it up here?
Okay, I didn't notice it. Sorry.
It was showing up here.
It was a loss. It was minus 100.
Minus 107.
Okay, I didn't notice it, but that's where I should look at for it. Okay, that's fine.
Let me do it again. So you see there, up there again.
Okay.
And then this is my margin. This is my total equity. And this is the available resources I have for further purchases or whatever. You understand? So now I close again. You've cost me to lose another 107. You will pay.
Sorry.
I will come collect out. Don't worry.
Don't worry. When do you also start to pay according to Francisca?
All right. So that's it. All right.
Thank you very much.
We can take trades. All right. We can close it up. We can open it up. Then later, as time goes on, we'll start delving deeper and deeper and deeper, so we can understand when the trade that you've taken is a kind of rejecting, and you need to jump out of it. You understand? Because that one is also important. All right. The kind of signals you see that will tell you, okay, this is what's happening. Time to jump off. time to close it. This stop loss is going to hit or close it down. All right.
I have a question.
Okay, shoot.
So Uncle E, so for the MT4, like where we are now, is where we do all the trades. Then
Yeah.
the trading view is where we do analysis, right?
Yes, correct.
So we are creating an account in trading view alongside. So whatever we are doing on MT4, we'll like have it like on trading view as well.
Not exactly. Not when you're taking signal. Not when the signal is already done for you. You understand?
Okay.
Yes. Because when the signal is already given to you, you don't need to do your own analysis anymore.
Analysis anymore. Okay.
Okay. Trading view is for you to start from scratch, create your own analysis, draw your own trend line.
Okay.
Put your arrows, put your stop loss, do everything based on, because here now in this place now, you see, I cannot do a lot of things. I cannot set my markers, set arrows and all that. But in trading,
yes, you cannot do that F function. Yes.
No. I cannot put set trend lines here. I cannot set.
And you cannot change the candles to lines.
Exactly. Yes.
Yes.
So that's why you have trading view. That's why, and then the trading view that we have is not really pro. It's the ordinary trading view. If you want pro, you pay more.
Then I also think that once you have gone through the university at first and you understand how to do the trade, take trades and do all that, it's good to go back to the university and brush up. Then all the information, you know, the first time we were going to the university,
yes,
you were not really, you were just had an open mind. You were just trying to understand. So by now that you are able to even do trading on them, by the time you go back to university, whatever it is they are saying, you will be able to understand better and you'll be able to see clearly. So you
answer that question next time. She
yes, I know. Yes, that's what I'm going to start doing from this weekend.
Yes,
I will start it again.
Yes.
Yeah, I'll start it again.
It's a good thing to do. It's a good thing to do.
Yeah, thank you very much, Uncle E. I don't have any other question.
No problem.